If we have a look at the key issues that we're here to talk about, and the first one, as always, is the stock markets. And probably with the stock market, what we do have is the US market had a little bit of a comeback to reality year. We saw last year incredible amount of overvalued US stocks, but no one seemed to care. And so I didn't have any reason to worry about them kicking back because everybody seemed happy. But we saw a correction of up to 20-30% on some stocks in the US, even in the top end corporations. That comes as no surprise to me because they were massively overvalued in the first place. So to see them coming back now to these current levels, I don't have any concern. That's where they should have been. In fact, for many, I still think they're overvalued if you look at the number crunching. But everybody's saying this is the bottom. Now, as a result, again, confusion reigns supreme. Anything could happen either way. What that does mean is that are we in a position where confidence is flat, or are we seeing a period of profit taking? Now, when something goes up, someone's making money. When it goes down, someone's usually seeking opportunity to buy. So to me, it's a hard one to call right now because we're just starting to see the US market start to reignite. But as I say that, just last week, the Silicon Valley Bank collapsed and sends the frenzy and the rumor mill into overdrive once again. Again, misinformation. One bank could be the start of many, could be just an apparition, could be just a badly run business that shouldn't have been doing what it was doing. But watch the rumor mill and the misinformation go out of control over what could potentially happen as a result. That's going to be interesting. Now, I still remain focused on value. I still think that's the only way to invest, even in the modern, crazy, manipulated, and strange world we live in. Value still is the most real thing you can do. Now, crunch numbers sensibly, good PEs, good profit, good dividends, etc. And hence why I've always been heavily focused on making sure that we have dividends from companies you invest in if you're going on the stocks. If you're going growth only, you're hoping things go well. But if you get a dividend, at least you've got a backup plan, that you've got some money on the table to buy your groceries. You don't have to worry too much. It helps you sleep at night. And believe you me, when you have volatility, you need a sleeping pill. And that dividend is that. Volatility is strong as ever in the market. Even though it's been quite flat, it's still been a highly volatile year, and I can't see that changing for all the reasons that I mentioned previously. We're living in that different world, that digitized world, where people are doing what they want and they spin the story on the mass for us to just mind our own business. We're more interested in things that have no relevance on our life than the money matters that are ruling our superannuation and our investments and our livelihoods. And if you look at why I'm saying that, here is the stock markets over the last 12 months, since we did the last seminar, and you can see that we basically started at a base of zero, and over on the other side, we're finishing at a base of zero pretty much. So the markets have literally done nothing. Now, we predicted that they would do around about mid-fives, and you can see here when we did our seminars, usually we would do our seminars in October, and sure enough, we would be at about mid-fives. But we had that big drop in October, which is normal. Happens every year. I'm not sure why, but they're consistent. But you can see the FTSE is led, the way. It's up near on 15% year on year, which is incredible when you think that apparently the UK is a basket case right now. But it's the strongest market. Australia comes in second, overall just on 5-10% growth year on year because there's value and more real. And then the Dow Jones, basically nothing. But if you look at this, it's been as high as 15s, it's been as low as minus 12s. In that volatility, someone is making a lot of money. And that's the thing. It's hard to know what to go to. And it's one of the reasons I'm not a big fan of index funds, because you can see over the year, they're telling me I earned not much. But someone made a lot of money in those highs and lows, in those peaks and troughs. Just usually isn't us. So think about what you're buying. Don't follow the indexes as much as you should. Follow individual stocks that are good value, a good company with a good dividend at a good price. They're the things that matter the most. This volatility is here for good, because no one is checking on it. No one is policing it. And that's incredible to me, because we live in a digitized age. The government knows instantly who made or lost money every day on the stock market, because it's all digitized information. But no one ever gets brought up and asked and checked, not publicly at least. If we have a look at the reality of it, I'm curious, does anyone actually check numbers anymore? Because they're very, very frightening. If you look at it, here are the companies we track every year. So this is not saying you should buy these. This is not saying anything. This is just indicative. We've been tracking these companies for all of the update seminars we've done, because they're large, they're significant, and they're good barometers of what's going on. Now, if you have a look here, BHP to start with, sad year, it was down 11.7. Now, I'm benchmarking the same as we do every year, which is basically the 9th of September to the 9th of September. And there's BHP down 11.7%. So one would think that if you're down 11.7%, your profit mustn't have been very good that year. But if we look at the profit, it went from $11 billion after tax to $30 billion. Now, I'm not sure about you, but my logic says that if my profit has gone up 3 times, my share price should have gone up quite considerably. But not in the modern world, apparently. That seems to be a bad thing. Goes up profit, goes down value. Makes no sense. If you look at HSBC, its profit went from 4 to 12. Its stock price did do very well. But last year it went up more, even though the profit went down. Doesn't figure. If you look at Bank of America, it brought in a $30 million profit, almost double the year before, and it came in with a 15% drop. Where last year it underperformed the previous year's profit, and it didn't do so, it went up 60%. And this thing, these numbers are strange. Okay? Microsoft, classic case, its profit up to $72 billion. Billion, that's a lot of money, but its value went down 11% year on year. Now that could be a value buy, it could be the start of a trend downwards, but it's strange that when you're making that much profit and increasing year on year, how does your share price not demonstrate and reflect that? And this is what I'm saying, the confusion in the world, the misinformation, the manipulation is becoming stronger and stronger and stronger. And again, don't panic, don't sit on the sidelines, don't protest, just understand that things are going to be weird and try and take advantage of them in that regard. If you look at the 3 key indexes, there's the down, officially down 7.7. The Aussie was down 6.8 and the FTSE up 4.8 in our same cycle periods. Now that's since recovered that, kicked back up, all quite nice, but it just shows indication. Now again, nothing really to warrant those falls. Profitability was strong, COVID was over, everything was good, but the market went down. You would have thought in 21, 20 that we would have had big falls through to COVID, but apparently not. And that's why no one can predict what's going to happen. No one knows. But if you buy a good company at a good price, at a good dividend, you're better off than you would be if you're just punting at the wind. My first prediction of this year's update for the stock markets is I think the US market's going to have a pretty good year. It came off last year for no real reason, good strong profits, and it's still a fall. I think they've repositioned the market, took some profits, ready to buy back at the lower prices and push it ever high to make even more money for the larger organisations. The Australian market, I think, is still terrific value, and I think it's going to have a good year, 5 to 10%. And I think the FTSE is just going to kick on keeping on because it's a decent market, it's fairly controlled. I think it's going to have a pretty good year. So overall, the stock markets should do pretty well because we're out of COVID, the world's in a fairly sensible place, oil is back normal, let's see what goes. But I'm sure they'll throw a couple of hand grenades over the fence somewhere and see what happens and cause a bit of mischief.